Hi then, welcome to it. It's the Business Blunders and Brilliance podcast with me, your host, Archie Moyo, back at it again. I know I didn't come through with the podcast last week, but we're back. And we're back this week with episode 2 of our Zim Investor series. As I start this, it's been almost exactly a month since we did the last update, which was the first update. And in that time, we've added 4 stocks to the portfolio, though we haven't spent a lot of money on that. And our current strategy is to dollar cost average into the stocks every month or whenever I get money. My fixed period for my dollar cost average is about a month, and that's what I'm doing. In the month period, I did FOMO into one of the stocks that I have there. Big mistake. I'll let you know more about that. But right now, let's get into it.
Continuously improve yourself. Welcome to it. It's the Business Blunders and Brilliance podcast.
Okay, yes. Like I said, welcome back. Sorry I was gone last week. I had a few things to deal with and couldn't make time to actually do the podcast. But we're back. I think we'll try to keep up with our 2 episodes a week consistency. Like I said, the strategy is to dollar cost average. Dollar cost averaging is when you decide that the way that you're going to buy stocks is based on fixed term, fixed amount, and in some cases pre-selected stocks. So for example, I can decide I'm going to be putting 50 RTGS into Econet Wireless every month, and that's it. Whether the price is up or down, I just put that $50. The other way people choose to invest is by timing different stocks, where if it's in the red or if it's down, that's when they buy in, and then if it's in the green, they decide to buy other stocks that are down so that they can get a boost automatically off those. So because I'm trying not to complicate the investment strategy too much, DCA or dollar cost average is what I'm going with. So one of the things that's key to know as we start this episode 2 update into my investment journey, this is with my investment portfolio, is that since the last update, I've made a few changes to the Excel that I use to track my investments. The first change that I made is I now track each purchase transaction in RTGS and in US dollars. And for the USD, I convert it at the black market rate of the day. For that rate, I use zimrates.com. It's a great research site. It even has historical rates. So you can check what the rate was in May of 2020. And that's what sort of helped me to clean up my data with regards to stocks that I bought some time back. The third change is that my average cost of each stock now includes the broker fees. So initially, when I was calculating how much my stocks had moved against the cost of buying them, my cost was just based on the price of the stock. So for example, if a stock cost $1, I would just measure its performance versus the dollar that it cost when I bought it. But I've decided now I measure against the dollar plus broker fees, which may end up being like $1.05. So I'm checking the movement based on the cost that I actually went out. I did consider also adding transaction charges, but that's too much work. So that is what's happening there with the cost of each stock, my average cost. And I also track movement of my stocks in both RTGS and US dollars. So I'm tracking the changes in terms of percentage changes in RTGS. I'm tracking them in US dollar. Why am I doing this? Is because while the black market rate or the bank rate hasn't been changing much, it does change from time to time. And you don't want to celebrate that a stock is gone up by 5 RTGS when the USD to RTGS rate has also gone up by like 5, and then it's a zero sum. I want to be able to actually see what's happening with the stocks. It went up in RTGS, great. Did it also go up from a US dollar point of view? And I'm using US dollar as my stable base to actually calculate this. And then in RTGS, I'm tracking my purchases for 2018. Those purchases I have converted to an RTGS price that has the effects of black market, and then I use the rate of 100. So for example, if I bought Econet shares at $1 in 2018 when it was 1:1, for me to have a better comparison, I just started saying, okay, so the stocks that I bought for $1 are now worth 100. I use the 100 rate as my index or my base for all my comparisons against like black market movements. So stocks that I bought for $1 in 2018 are worth 100 RTGS in my Excel sheet. This sort of helps me to actually see the movement because one of the things that I realized the last time is that I would be comparing that I bought a stock for $1.45 against its current price of 33 RTGS, and it looks like it has grown by like 33,000% or something weird like that, when the actual fact is that from a US dollar point of view, it was worth $1 then, but it is now just worth like 20 cents. So I try to make sure that I have that. It also helps me to make sure that from a keeping or adding point of view, I understand which stocks to keep and which stocks to be bullish on. Hey, see me using words like bullish. If you don't know what that means, I did an episode where I went through stock market terms that can help, a dummy like you and I. That's pretty much it in terms of the changes that have happened with my Excel. So the next thing that I'm going to be doing from that Excel point of view in terms of improving it is I'm going to just categorize my stocks by industry, to say technology, transport, manufacturing, and then I'll see where I've actually put in the bulk of my stocks. I hadn't been making my decisions based on an industry, it had been based on individual stocks and what they do to me, how I feel about them. And now maybe if I start looking at it like that, I can actually understand. It will help you to make decisions. Like if you see yourself investing into hospitality, when you know that hospitality is on a dip because of the lockdown, you gotta step back a bit. From a big summary point of view, high level, when I'm looking at my actual portfolio, from our last update a month ago, the portfolio has grown 22%. That 22% includes the 4 new stocks that I bought. If I just look at the stocks that I had last month and now in terms of value, those stocks have gone up by 8%. Some have gone up by more, some have gone up by less. I'll just break it down so that you can actually understand. Alright, so as I go into the actual stocks that I have in my portfolio and how they have moved in the past month and since I bought them, I want you to know that all the prices that I'll be giving out as I go through this are in Zimbabwe dollars, ZWL, unless I say otherwise. So the first one is Zim Papers. Zim Papers is down 14% from our last month update, and it's up 22% from the time that I bought it. I bought it at $2.54. It is now currently worth $3.10. From the portfolio, it was 9% of my portfolio last month. Now it's just 7%. Stock number 2 is Mashonaland Holdings Limited. I'm down 5% from last month in terms of value from these stocks, but I'm up 1% from the time that I actually bought these stocks. I bought in at $3.36 and they're now worth $3.40, so just 4 cents more, though in episode 1 they were worth $3.60. So if I was a swing trader, I would have sold when they were actually at $3.60. These were 8% of my portfolio, but now as of this month they are 6% of my portfolio. And the next stock is Unifreight Africa. This is one of the best performing stocks on the Zimbabwe Stock Exchange. I think I read somewhere that if you had bought $100 worth of Unifreight in January, it would now be worth over 1,000 Zimbabwe dollars, if not 10,000, not sure. But anyway, I'm down 5% from last month, but I am up 116% from cost. I bought into Unifreight at $13.22 and it's now worth $28.50. When we did the last episode, it was worth $30. Again, someone would say you should have sold it at that point when you're at the high. And the Unifreight stocks are 26% of my portfolio, down from 33% last month. Next stock is OK Zimbabwe. OK Zimbabwe, I'm down 2% from the last month update, and I'm down 22% versus the cost of buying them. This is largely because my average cost of buying each OK Zimbabwe share is $22, and this is me converting from the cost of buying them back then in 2018, also with the other shares that I've bought. These shares are now worth $17.65. The USD value of these shares in 2018 was 28 cents, and the shares are worth less right now. So I'm actually really bullish on OK Zimbabwe because I feel like it's undervalued at the moment because it's currently worth less than what I paid for it 3 years ago. The OK Zimbabwe shares are 14% of my portfolio. Last month they were 17%. So they've gone down because of the value reduction as well as the mere fact that I've added some shares to the portfolio. The next one is Econet Wireless. These ones are always a big headache for me to actually account for them from a financial point of view because I bought them in 2018 in US dollars. But anyway, I'm up 38% versus the last month. The share price of the Econet Zimbabwe shares has gone up by $10 since last month, though I am down 74% versus my cost. So my adjusted RTGS price for purchasing the Econet Zimbabwe shares is 149 RTGS, and the shares are currently worth 39 RTGS. But this is up from the $28.50 of last month. So for me, again, this is another good share. I feel like it's undervalued. As long as the share costs less than what I paid 3 years ago, there's a loss in value. They are still doing good revenues. I haven't had a chance to go through their numbers, but they were published recently, and I will go through that and maybe talk about what they've done. These were 28% of my portfolio last month. They're now worth 31%. They jumped up because of the value increase, even though we actually added other stocks. The last stock from the ones that I owned when we did the last update is First Capital Bank. Up 21% from last month and up 43% from cost. I bought in at $2.54 and these are now worth $3.64. They were worth $3 when we did the last episode, so these have been going up. I love them. They are 4% of my portfolio. They were 4% of my portfolio last month. They've managed to maintain because of the value increase of those shares. So now I'll talk about the new shares that I bought. These now make up 11% of my portfolio, including the last one, which was my FOMO purchase. So the first one is Zimre. I'm down 4% versus the cost that I purchased Zimre at. I bought in at $4.27 and it is now worth $4.11 per share. These take up 2% of my portfolio. I don't have a real story around Zimre. I think I went through their company, what they do. I liked it. I was like, let me buy it. It's a long-term hold for me, so it's fine. Next one is Star Africa Corporation. I did mention that I wanted to buy Star Africa in the last episode, and this one is a long-term purchase for me. I'm yet to work on a focus episode where I'll talk about Star Africa, why I bought into it, and what I think it's got coming up from a value perspective. So I'm down 31% from the cost of buying those, and these make up 1% of my portfolio. I bought in at $2.84 and they're now down to $1.95. Yeah, they've been dropping, but I do believe in these ones for the long term, so I'm not really worried. The next shares are Ariston Holdings. These ones, I came across some very good information and it was a value purchase for me. I am down 1% from the purchase of these stocks. I bought in at $3.54 and they are now worth $3.49. A very slight drop. They are worth 7% of my portfolio. So from my added shares, I put in the most value into the Ariston ones. And then lastly, I don't know if I can say not least, but lastly, my FOMO purchase. I've seen this called the meme stock of the ZSE on the Twitter streets, and this stock has hit an all-time high of 40 cents, and I know people who bought in at 4 cents last year. So you can imagine the growth that these people have seen. They've at least seen like a 10x on these shares. These were my FOMO purchase. I'm currently down 10%, bought in at 30 cents, thinking, yay, it's a dip. I'm going to buy in and it's going to maybe go back up to its ATH all-time high of 40 cents. But it's been going down. It's currently worth 27 cents. This is MedTech Holdings. Though, having gone through their site, I believe like their company where in the long term, they'll definitely do something. So it's okay. That is my update when it comes to my full portfolio. What has happened since the last month when we did the update. I know I wanted to do these updates on a weekly basis, but I'm really looking at there's more value if I do this from a monthly basis, because some of the moves in between don't really matter because it's an investment portfolio for me. It's not a trading one, so I'm not going to be doing too many movements based on price fluctuations. So I'll be doing this, I think, every month now. I'll try and do one at the month end so that I can then start doing it every month as I'm calculating my net worth. So that's pretty cool. Thank you very much for making it to this part of the episode. As always, please subscribe to the Kaizen You podcast from wherever you listen to it. Share this episode with your friends. Share it with anyone who you know who has just started their investment journey and really wants to improve, and we can help each other. I am not a financial advisor. I'm just a person who started investing last year, and I have really gotten a huge interest in it. I do a lot of research and come through and speak about what's happening with my portfolio in the hope that maybe you don't have to do as much research. Thank you very much for joining the show. I'll catch up with you on the next one.
Continuously improve yourself.